Hello. Audio stream. Okay. So, live students, please confirm whether the audio is good. Audio and video both. So, in the last class, in the last session, with regard to the chapter capital budgeting, we have completed up to the concept of depreciation. Adjustment to depreciation is what we are going to consider. See here. Adjustment to depreciation. See. First one. Let us first understand what is depreciation and why it is important for capital budgeting decision making. How it is important? Let us understand that. See the screen. What is adjustment? What is the adjustment? Depreciation. Sorry. First, let us understand one thing. There is an asset. Let us say the asset cost is 1 lakh. Company will spend this 1 lakh rupees as a capital expenditure. As a capital expenditure. You know the difference between capital expenditure and revenue expenditure? Example I will tell you. Revenue expenditure will expire in the same year. Capital expenditure, once you spend, benefit will be for more than 1 year. Example, I will pay salary. Once you pay salary for 5 years, he won't work. If you pay salary, he will work for 1 month. Correct? Or even remunerations per annum, if you pay, yearly once you should pay. For the work done for a year, you will pay. Next year again, you have to pay. Means the benefit of something do not go beyond 1 year. We call it what expenditure? If the benefit of something do not go beyond 1 year, what we call it? If the benefit of something is extended to more than 1 year, then we call it capital expenditure. Example, I will purchase a AC. Air conditioner I will use only for 1 year, or benefit can be used for more than 1 year. That's all. Simply to tell, anything you spend, the benefit of which goes more than 1 year, we call such expenditures as capital expenditure. Any expenditure you put, benefit of which will be expiring during the year itself, we call it revenue expenditure. The simple way of understanding. See, revenue expenditure, capital expenditure, accounts we will discuss. Income tax section number 36, 37 we will discuss. So I am not discussing much about that nature of revenue and capital. Simplified way of understanding. Revenue expenditure benefit will be extended only to 1 year or less than 1 year. Capital expenditure benefit will be for more than 1 year. It can be 2 years, 3 years, 5 years, 10 years, 20, 30, 50, whatever it may be. Those all comes under capital expenditure category. Everyone understood the point clearly? Yeah. See now, listen. Why I am telling this? In our books of accounts, there are two very important statements. One is a P&L, another one is a balance sheet. P&L, right? All items in the nature of revenue, whether revenue income or revenue expenditure, sales of goods will be revenue nature, revenue income or capital income. And once in every year it will, once in every 2-3 years it will come, or every day it will come. So it is everyday recurring income or one-time income. Answer. All recurring incomes in a year comes to P&L credit side. All recurring expenses will come to P&L debit side. Salary every month, wages every month, rent every month, electricity bill every month. Understanding? Repairs at least 2-3 months once. Clear? Staff welfare every month. Like that, so many things we need to spend every month or at least once in a year. Those all comes under this category. Every day I will get sale. Every day I will get the sale. Monthly I will get interest. Monthly I will receive rent from my tenants. Those all comes under this side. This side box. Everyone understood? Huh? We call it P&L credit. We call it P&L debit. We call it income. We call it expense. Listening? Huh? So the balance will become which profit? Net profit. Now listen carefully to the point. My question is, what is this? Answer. What comes in balance sheet? Something which is spent but cannot come to P&L goes to balance sheet. I purchased a fixed asset. Fixed asset is purchased every month, every year, or once in every 5-6 years. Those can't come to P&L debit side. Therefore, where we will transfer that directly? Balance sheet. Fixed asset will be coming here. Clear? But my question, tell me. I purchased raw material. Where it will come? P&L or balance sheet? I purchased raw material. P&L or balance sheet? Question number 1 over. I purchased the fixed asset. Where it will come? P&L or balance sheet? Directly will go to, won't come to. Why it won't come? Why raw material is coming to P&L? Why, what to say this? Fixed asset won't come to P&L. Reason is, one is of which nature? Just now I discussed 2 minutes back. One is of which nature? Another one is of which nature? One is which is recurring, which is non-recurring. Whose benefit will be there for more than 1 year? Whose benefit will not be there for more than 1 year? Therefore, raw material will come to P&L. When I say P&L, trading P&L. Okay. Fixed asset will go to. Now tell me, another question I wanted to ask you. To do my business, tell me, capital budgeting chapter, what we are learning, see the screen. Raw material is there. Entering into machinery, finished product came out. Finished product will be made as a sales. But sales minus this raw material purchase and all other expenses will give me profit. Will give me profit. Now listen carefully. Start again. What is there with me? Absolutely everyone. I said in the entire capital budgeting chapter, important adjustment is depreciation adjustment. Normally I will not leave you. Depreciation la football. Listen carefully. Start again. There is raw material. Raw material goes into plant and machinery. Raw material goes into. What will come out? What will come out? Okay. So, there is raw material. There is a plant and machinery. Finished product will come out. What I will do with this finished product? Sales. Sales is my profit. Sales is my profit, everyone. No, sale is not my profit. From the sale, what I need to reduce? Purchases I need to reduce. Correct? What I purchased? Very good. Minus raw material enters into plant and machinery. Finished product will come. Packing, all these things, some manual work will be involved. At least something in the middle. We call it as a labor charges. Minus. This plant and machinery will work with electricity. This factory will run with rent. All those things will go into the cost of the product or not. What we call them? Overheads. Start again. What is there? Goes enter into. What came out? What we will do with finished product? Sale is entirely my income. No. Entirely my inflow. No. In that, what we should deduct? Purchase of raw material. And the raw material, if I purchase directly, I can sell. No. We have to process that. Process like two costs will come. Number one. Number two. Number two. Very good. Tell me the overheads. Number one. Tell me some overheads. Means other than material, other than labor. If there is anything, you tell me. Something which we can't see, but without which production can't happen. You can see electricity, cannot see electricity. But without electricity, machine won't work. But for that electricity, we should pay the fees or not electricity bill. Everyone. And that electricity bill cost will be included into the cost of product or not? Definitely it will be included. So, what we can't see directly, but without which production can't happen. We call them as what? Overheads. We call them as what? Overheads. If I say car, people will see only the body structure or whatever the seats or the steering, brakes, accelerator, etc. You can't see petrol. Without that, car won't run. Petrol is an overhead for the car. Clear? When I say a car, explain a car means immediately what features will come in mind? A very big structure of a car, seats, leather upholstery, brakes, accelerator, gearbox, all these things will be remembered because we can see all those. What we cannot see inside the car? Petrol we can't see, without which car won't run. So people can't see that, but without the car won't run. So now petrol I can't see directly inside the car. Petrol not there is not the answer. Listening? See, I will ask a question. What is the cost of using this car per month means? What is the first cost you will tell? Fuel first cost. Correct? And I can't see fuel, show me inside the tank means I can't see. But without that car won't run. Petrol becomes what? Expensive here. Overhead cost. Okay. So anyway, come back to the main story. What is there? Very good. What is there? You spent or not spent? Plant and machinery you spent or not spent? Very good. Next one. What came out? What came out? Very good. This finished product is sold. So we created sales. From that sales, everything, Whatever I see as the sale is an inflow to me. Yeah? In that, I spent money on what? Loudly. Loudly. Very good. After that, what I spend? What I spend? What also I spend? Tell me the overhead costs. I have a factory, I have machinery. Tell the overhead cost. Rent will be there. What I said, you are repeating again. At least you are repeating. Thank you. Rent, electricity. Next, okay. Transportation will be there for the goods. Like that, I can write depending on the nature of your product. So many overhead costs will be included. Yes or no, everyone? People will do the inspection or quality control. All those things will go into that. So all the costs we call as what? Loudly? Now the question starts. Tell me. Product. Can you please explain what is this? This all part, what we call? Product cost. Can I cost here? What is this? Product sales. Repeat again. What is this? 1 second. Mark. What is all this? Product cost lo what all went? Purchase cost of raw material, labor, overheads don't tell, labor, rent, electricity, transport, and so many other things entered into the cost of production. Correct? Now tell me, I have raw material only. I don't have any machine inside. I have only raw material. Directly I can sell finished goods. What is required? My finished product is sugarcane juice. What are the two things that I require? First, sugar cane, that is raw material. Crushing machine will be fixed asset. So plant and machinery is the crushing machine. Sugar cane is the raw material. Now you answer. What should enter into the machine? Should enter into the crushing machine. What will come out? What is the juice here? Loudly. I will sell that. What I will sell? I will fill that into a canned juice and I will sell the sugarcane juice to the people. That is our business. You are seeing a real fruit juice, all this. Like I will do some preservation, everything, and I will sell the canned sugarcane juice. Now you answer my question clearly. Imagine a production process. Sugarcane is a very good. Crushing machine is a asset, plant and machinery there. What came out? Finished product. What is the finished product in our case? I have to pack it, fill it, and lid it, and everything we will cover, and we will sell it. Correct? Now I got money. Entirely my money. I have already spent. What you spent? Number one, sugarcane I purchased. That you have to deduct. Second, that sugarcane machine will run because of an electricity. Total monthly electricity bill divided by number of units produced. Per unit electricity cost will come to the cost of the product. Do you understand? Basic business. Everyone will do that. Electricity bill total during the month divided by number of units produced. Per unit electricity cost will come. Correct? Add to the cost of the product. Let the consumer bear everything. Third, I have rent. That particular sugarcane was kept on the road. Okay. I have taken that on 5,000 rent from a person. 5,000 rent divided by number of units will give me rent per unit. Again add to the cost of the product. Listening. Finally, some packing or transporting or something, all charges, all other charges divided by number of units, charges per unit will come. Again add to the cost of the product. And what we are doing, this concept of including all the costs into the cost of product is called as absorption costing. Very, very important for your costing paper. What costing we call it? Absorption. Why name came as absorption costing? Every cost is absorbed by the product. Every cost is absorbed by the product. It's like a sponge. You put something, it will absorb. So, here the product is absorbing everything. See, try to understand. Product cost is absorbing raw material cost. Product cost is absorbing Labor cost. Product cost is absorbing rent, electricity, transportation, power, all charges. Product is absorbing. Correct? That means the cost of product is only the cost of purchase of raw material. All other costs are. Therefore, they call it as what? Absorption costing. Your costing paper is there? Yes. Absorption costing. Sir, there are how many types of costing? There are two popular types. There are so many. Two very, very important. Absorption costing, marginal costing. Marginal costing, leverages we discussed. Absorption costing, now we are going to discuss. More details about that we will be seeing. You will be seeing in the costing paper. Okay. Sir, come to the main story now. You purchased raw material. Purchased sugar cane. What came in the middle? Plant and free of cost. You purchased the machine. Loudly. At that problem started. See here. Listen. Raw material, labor, overheads. These three will form part of the cost of product or not. Raw material cost, labor cost, overhead cost will go into the production cost of the cost of production of the product or not. Loudly. Okay. Now I will ask a question. Simplified answer you give. Raw material is a revenue expenditure or capital expenditure? Labor charges to the workers is revenue or capital? And one time you pay, like Kattappa, they will work for next 10-15 years, sir. Revenue. So what nature? Revenue. Labor, electricity bill, if you pay once in your life, government will not collect for next 4-5 years, sir. You have to collect every month, only once in every year. Every month you have to pay. Revenue or capital? Very good. Now tell me, whatever the cost we are absorbing to the product are all revenue nature or capital nature? Loudly. Now listen carefully. How beautifully the costing product costing is given. What they are doing, there is a sugar cane. There is a machinery. Sugar cane enters into the machine, and once the sugar cane juice comes into the canned format, we are going to sell this. Correct? Answer, yeah. Capital budgeting, we will take profits, we will take cash inflows. Everyone? Sorry, first let us see what is the profit. Later we will go to the cash flow. See the screen. Sale of sugarcane cans. Some amount will come. Minus, please tell all, hey, sale is a revenue income or capital income? Super. Next. Raw material. Oh, there WhatsApp. Okay. Leave it. Now answer. What I am discussing here? Sale. Sale of sugarcane cans we have made. Some sales happened. My sugarcane sales is a revenue item or capital item. That's what I am asking. Revenue or capital? And once every 5 years, every day. Every day. It's a revenue nature. Tell me, what are all, the costs what you deduct should be of capital nature or revenue nature? Tell me, what is the first revenue cost? Loudly. Minus labor. Minus, okay, na? Overhead cost. Now, I will deduct add these. Answer? Yeah. What will come? Sales minus all the costs. What will come? Loudly? Very good. Now question starts. See here. We have included all the costs. Okay. Now you answer. Electricity you pay. Total electricity bill divided by number of units will be the cost per unit. Electricity cost per unit absorbed to the cost of production. Correct? Next. Labor also same. They took monthly salary of 10,000. Like that 10 people worked, 1 lakh I paid, 1 lakh divided by number of units produced will become labor cost per unit will add to the cost. Overheads also same, electricity bill, materials, all these things anyway you purchase, per unit cost will be there, you will add. Here starts the problem. Where fixed cost went? Simply to understand, without fixed asset, all production process won't be happening. Without what? Loudly. Fixed asset. Or in the middle, this is not there. Production process will happen or will not happen. This came free of cost of purchase. Where the cost went? That cost you did not include into the cost of product. Therefore, they got it out. Okay, do one thing. Asset you purchased. Answer, sir. You purchased. Reduce cost of asset. If I reduce cost of asset, it goes to negative. Why? Sale will be made 100 rupees. Asset is 10,000 rupees. We purchased a building worth 1 crore. First month rent will be 1 crore. How much you will charge rent? 30,000, 40,000 you will charge. It will slowly get recovered. Capital expenditure. Correct? Therefore, they brought the concept of depreciation. That entire fixed asset cost, if you charge at once, it results in negative number. Therefore, they said, estimate one life for that asset first. This asset, we purchased for 10 lakh. How many years life? 10 years. So 10 lakh divided by 10. So 1 lakh rupee per year. 1 lakh rupee? How many units are produced? 5,000 units produced. How many? 10,000 units produced. So per unit, overhead cost depreciation will go rupees 10 per unit. Understand the point clearly? Inside the cost of product, what also went? Answer. Now listen carefully. Depreciation is really spent, not really spent. Really spent. However, we are not spending every year. See, in my example, fixed asset was purchased for how much cost? In my example, fixed asset was purchased for how much cost? Answer. Every month once. For how many years? 10 years. So that life of the asset, and the next 10 years I won't buy any asset. For 10 years estimate, I purchase one asset for 10 lakh. Correct? Now what happens? See, 10 lakh is the cost of asset. Without that asset, production process can be there or cannot be there. So sales happen because of raw material finished goods. Sale happened because of raw material finished goods. But raw material converted into finished goods because of material, labor, overhead. But in that case, fixed asset also helped in the production process or not? Where the cost of fixed asset went? It is not there in the cost of production. Therefore, what they thought is, do one thing. Entire fixed asset cost don't include once, because raw material is revenue, labor is revenue, overheads are revenue. You should also convert cost of fixed asset into revenue expenditure nature. Originally, fixed asset purchase is which expenditure? We have to convert that into revenue expenditure. If you want to convert, what you should do? Revenue expenditure. What I told you, what is the revenue expenditure? Benefit will be there within more than or less than? Less than or equal to. That's why SL under depreciation per annum we will calculate. We are converting capital expenditure into a revenue expenditure there. Conversion of dash into dash. Capital expenditure is converted into revenue expenditure. Listening everyone? Tell me. Total cost of asset is how much? Loudly? Very good. How many years life? What will be the cost per year? Revenue or capital? Loudly. Which is revenue? 10 lakh or 1 lakh? Very good. 1 lakh is revenue nature. Revenue nature can be absorbed to the cost of the product or not? Tell me, I produced 10,000 units. What is the depreciation per unit? Loudly. 10 rupees. Tell me, how the depreciation will be written? 10,000 units into 10 rupees per unit. Totally, how much depreciation cost? 1 lakh. Okay, well, now listen carefully. Please see the screen. Sales 5 lakh minus material 1 lakh, labor 1 lakh, overheads 2 lakh. In this 2 lakh, rent 50,000, power charges 50,000, depreciation 1 lakh, totally this became 2 lakh. Tell me, sales minus cost, what is the profit from this? Everyone, loudly. Totally 5 lakh minus 1 lakh, 4 lakh, 4 lakh minus 1 lakh, 3 lakh, 3 lakh minus 2 lakh, how much? 1 lakh is the profit from this transaction. Everyone understood clearly? Yeah. I will ask a question. Tell me, really did you spend 1 lakh on material this year? Really, I'm asking a simple question. Really, did you spend 1 lakh on raw material this year? Or else all production happened. So you really purchased. Did you really pay labor charges of 1 lakh this year, everyone? Very good. Did you really pay rent this year, 50,000? Did you really pay power charges, 50,000 this year? Did you really pay depreciation 1 lakh this year? No, I did not pay. Means in all these, depreciation is a real expenditure, but not the expenditure of that year, which is already spent. We purchased fixed asset today, na last year. Just we are charging what? Depreciation. So depreciation is a expense, but not the expense of that year. Not the expense of. Expense means what? Something should be treated as an expense. Na? For me, if it is an expense, for someone it should be income. Salary for me. I am employer, you are employee. Salary. For me. For you. Tenant. Rent for me. For you, owner. Answer. Labor charges, I am paying you. For me. For you. Raw material purchase. For me. For you. Depreciation. For me. For you. Income. For you. It's not an income. That's the problem. It became income last year. For example, I purchased fixed asset worth how much in our example? At that time I paid you. At that time it is an expenditure for me. It is an income for you. That expenditure, that income was already kept up, yet to keep every year. But we can't charge everything in 1 year. We are breaking that into how many parts? 10 parts. 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. We will absorb into the cost of the product. Correct? So depreciation is allowed expenditure even under Income Tax Act. Repeat the statement. What is it? Depreciation is a allowable expenditure even under Income Tax Act also allows depreciation as an expenditure. But finance accountancy commonly say about this in depreciation. Depreciation is a non-cash expense. Everyone repeat, depreciation is a non-cash. Why they say like that? Na? In reality, that year you did not spend any cash worth 1 lakh. Correct? We want profits in finance, cash flows in finance. Loudly. This 1 lakh is really spent as a cash this year, not spent. But we reduced it and made it 1 lakh or not. What we need to do? What we need to do? What we need to do? Mind absent. Start again. Start again. Sales. How much is the sales? Minus. What is the material cost? What is the labor cost? What are all the overheads? Names. Rent, power, depreciation. Start. Rent. 50,000. Again 50,000. 1 lakh. Start answering now. Tell me. I got a profit of how much? 1 lakh. In this 1 lakh, material really spent. This is really spent. This is really spent. This is really spent. This one. I'm very sorry. This one really spent this year. But when you see profit considers 1 lakh only. But in this 1 lakh profit, we already reduced what? Really spent or not spent? We want profits or cash flows. Income tax want profits. On that only they will pay tax. Therefore, depreciation is deducted there in income tax. Accountancy want profit. You are not answering. Accountancy want profit. Yesterday I told 1 hour. Accountancy want profit. Therefore, depreciation is deducted. Income tax want profits. Cash flows. Income tax want profit. That's why we call profits and gains from business or profession. Profit ki taxation. Since profit is the motive of income tax, depreciation is again deducted. But FM intention was cash flows or profits. Yesterday for 1 hour we discussed one example. So profit or cash flow we want. Therefore finance go against to these two principles. And they said that I want cash flow, not the profit. Profit is how much? That is after deducting depreciation or before deducting? Loudly. How much depreciation is deducted? Therefore, that should be deducted, not to be deducted. Loudly. What we have to do? Add. So therefore, we will add depreciation of how much? How much will be the cash flow? This is for capital budgeting chapter. This is for income tax and accountancy. Do you now understand the concept clearly? How depreciation will impact? That's why I said that's one of the most important. I did not say is the most important adjustment in entire capital budgeting. 90% of all your capital budgeting questions in exam will have depreciation adjustment. Listening, huh? Almost every question that comes, last attempt question also have depreciation adjustment. Because that's the most important adjustment in entire capital budgeting. So they will definitely ask in exam. Up to here, are you all clear? Huh? Live students also please give a reply. Yeah. In the meanwhile, you people tell me, what is revenue expenditure? Benefit will be extended for within 1 year or more than 1 year. Capital expenditure? Capital expenditure will come to P&L or will not come to P&L? Revenue expenditure will come to? Loudly? Yeah. Where I am spending money? Capital or revenue? I am spending money where? Capital or revenue? Both. Without spending, how you got the asset? Huh? So start again. Start again. Where you are spending money? Capital or revenue or both? Both. But one comes to P&L. One goes to, but that is also real spending only. Yeah. That should also form part of cost of production. But I can't put it in 1 year. Therefore, what I will do? Break it. A breaking of that entire cost of asset into small bits and pieces for understanding of the people, they call depreciation. Converting the capital expenditure into the concept of converting capital into revenue, they call as depreciation. Depreciation is a real cash expense, not a real cash expense. Next, very important, under Income Tax Act, depreciation is a deductible expenditure or not a deductible expenditure? Loudly? If you think that I am asking all these questions for time pass or joke, let me first show you one document. Then you will understand. Capital budgeting. Okay. Investment decisions, capital budgeting. Just I wanted to show you one point. See here. See here once. Just see here once, please. Any question you take. What is purchased in this question? A machine is purchased. Okay, a machine is purchased and they are asking us to calculate. Next. Again they are asking cash inflows they have given already. What have you given? Cash inflow. When inflows are directly given, we need to do any adjustment, directly we can take. When we have to adjust, profits are given, we have to convert that into what? Okay. Every problem that they have given here. What is there? Depreciation. So whenever depreciation is there, we should be very careful. The amounts that we get will be the profits of that particular project. Up to here, everyone understood clearly? Yeah. If cash inflows are given, you are saved in exam. If they don't give cash inflows, if they give profits, immediately we need to convert that into cash flows. Okay. So this is how they will give. This question also have depreciation inside it. Next question also have depreciation inside it. See here once. Wherever tax rates are given, depreciation is given. Depreciation becomes the most important adjustment. What should be given? Depreciation should be given. Next, what should be given? tax. If these two are available in the question, a complicated question comes in examination. See here. Read this once, read that block once. Actually, this question I wanted to show you. Very good question. Came for 12 marks in exam. Here, what is the substantial matter here we need to discuss here? Company uses what method of depreciation? Company. Okay. Answer. Company uses what method of depreciation? Written down value. Income tax is given at what rate? Now the problem will start also in this question. Whenever income taxes are given, then we need to be little careful than a normal question. So this is how they will ask the question. So please make it very clear in your mind that we should know about depreciation adjustment very clearly. Okay, but listen carefully. Let us now understand this. Depreciation adjustment. Everyone had a full clarity on. Depreciation is a real cash flow, not a real cash flow. Spent or not spent? Spent, but not in this year. Already spent as a revenue or capital expenditure. That is broken into bits and pieces and call it as what expenditure? Revenue expenditure, and charge it to P&L. I mean, charge it to the cost of product and calculate profit. But intention of this chapter is profit computation or cash flow computation. So profits already depreciation is deducted. What we have to do? Okay. Now question will start like this. Please listen. Sales 100, costs say 50, depreciation 10. Depreciation 10. What we got is EBIT. How much? 40. Minus interest. There is no interest cost. Let's say all equity company. So what it will become here? EBT. How much is EBT? Minus tax at the rate of 30%. Tell me how much it will be? 12. Okay, tell me. What is the EAT? 28. EAT can also be called as what? Profit. Can I take this for analysis of capital budgeting project? No. What we have to do now? What we have to do now? Add back. Add back what? Therefore, profit should be added back with depreciation. How much is the depreciation? 10. So tell me, how much is this? 38 is what? Cash flow. 38 is what? Cash flow. These you need to take for computation of capital budgeting project. Tell me 4 columns year, cash flow. A cash flow 38 should come, not 28. Understood the point clearly? Yeah? Not just that. Now, can we do like this or not? You tell. What is deducted? What is deducted? What is added? Instead of deducting depreciation and instead of adding back again, completely can we ignore or not? You cannot, tax problem will come. That's the next discussion we are going to see. That's why I said depreciation is the lengthiest discussion today. Please listen. See, generally what people think, depreciation is deducted, therefore depreciation is added. Over, added, deducted, also don't take into consideration. No, like that you should not do. Why not? Depreciation, you will think that I will first deduct and next I will add. Anyway, I am doing minus and plus, those two will cancel. No impact will be there. Let us ignore depreciation. No, you cannot do like that because that will lose the tax savings benefit also. Let us show the impact in a clear terms with an example. See the screen. Company 1, company 2. So tell the same answer. Sales. Answer. Very good. Minus cost. minus depreciation. What it will become? How much? Minus interest, 0. EBT minus tax, 12. Okay, what is the EAT? What is the EAT? Plus depreciation. Totally the profit, cash flow will be, understood? Tell me, first what we have done, deducted, added a depreciation. Next what we have done, now one person thought that why you deducted, why you added, ignore completely. If you ignore, what will happen? Let us see. Start. How much? Minus cost, 50. So ignore depreciation directly. Tell me, what is your EBIT? What is your interest? What is your EBT? Answer, yeah. What is tax at the rate of 30% on this? 15. Then what will be your EAT? What is your EAT? Next. That's it. Plus depreciation you won't do. My cash flow is 38, your cash flow is 35. You ignore depreciation completely. If you ignore depreciation, person who taken depreciation will get more cash flow. Person who ignored it will get lesser value. Reason is like this. Tell me, how much is the depreciation? Loudly. 10. How much is the depreciation? 10. This 10 has given a 30% tax saving of 3 rupee. That 3 rupees extra we got exactly. Hey, have you understand the point? Different way also you can think. Company claiming depreciation has paid how much tax? Company not considering depreciation paid how much tax? 3 rupee tax saving happened because of depreciation. Do you know understand the difference? Answer my question. Can I ignore depreciation completely? First what you should do? First what you should do? Next what you should do? This is the model you need to understand. Everyone got a depreciation concept clearly, yeah? Write down the notes. What you have kept the heading? Depreciation adjustment. Write down. Okay, I will show you the notes, sir. Write down this, very, very important. Write down these notes. Okay, there you need to adjust little bit. If you know, you can do. And the project A and project B, yeah. So write down this. First what you have written, continue. Depreciation is the bigger one, write down that properly. Did you writing? Okay. Listen, we have completed depreciation adjustment. Which one? Depreciation adjustment. That is also completed. Next, working capital in both problems we will directly do. First model, let us start now. Keep the heading techniques in capital budgeting. Techniques in capital budgeting. Techniques in capital budgeting. Right on. Number 1. Accounting rate of return or average rate of return or book return. Also they call it profitability return. Book returns. Book means books of accounts, accounting books. That's why what I said in the last class, this is the only model which considers profits, not the cash flows. Do you remember yesterday we discussed about this point? This is the only model in entire finance which considers profits but not cash flows. Why? Accounting based calculation. Therefore, they consider profits, not the cash flows. Everyone clear? Yeah. So please listen. Now listen carefully. So first, I want complete silence, attention, concept is important. Listen. Recent 7-8 exams of CA-CML, never they tested this concept. Never. And not even in RTP, MTPs, they tested ARR. So, these concepts are always important for us in the exams. Reason is, maybe they come in September exam or December CMA exam, I don't know. But next 1-2 exams, ARR will be tested. Reason I will tell you. Institutes are now going on random basis, they stopped giving questions. They are going on the frequency of asking a topic. Example, I will tell you. Companies Act, there is a concept called as a buyback. Which concept? Buyback. That concept was tested for 18 times in exam. Highest number of times, if any question is tested in CA cainterlaw, buyback is a question. Listening, 18 times it came in the CA papers. So generally what people say, share capital means, share capital chapter, the first important concept is buyback. Like that people has a mindset. So everyone prepare certain areas in share capital chapter. Share capital chapter, if you ask anyone, any faculty for company life, you ask, share capital chapter, what is important means, they will tell differential voting rights, variation in shareholders' rights, spread equity shares, redemption of debentures, DRR, buyback, rights shares, ESOPs. These 9 topics important. Are you listening now? Last 2 attempts, none of these are tested in exam. They are asking nook and corner, going into how the registration of certification of shares appeal will be made in tribunal. These kind of questions are coming. They are in the syllabus, they are not asking outside syllabus. Point I wanted to tell is they stopped asking what seems to be important in the mind of student. Listening? So students are thinking, buyback important, buyback important. Stop asking buyback. Understood the point clearly? So please listen carefully to the point here. Listen. Likewise, this is one among the topics. And generally, whenever capital budgeting chapter is concerned, even people like me will tell NPV is a Maharaj of capital budgeting. Now, student mind, what will be there? NPV is very important. Remaining all are least important when you compare with NPV. Correct? But if you complete NPV discussion with me, you will understand why I said it's Maharaj of capital budgeting. I said NPV is great not because it came in exams. NPV is great because of its conceptual understanding. Clear? Same like that. ARR concept, market important. If you are writing CA exam September Jan, If you are writing CMA exams, December exams, whoever is listening, live, face to face, everywhere, mark this ARR most important. They will test one attempt definitely. I'm telling you again and again, don't ignore this area. Anyway, MPB we will study. This no one will study. So concentrate on this. Okay, listen now. Let me discuss this concept before I said important. Silence, please. Attention on the concept, please. Request. See here. There are two formulae they have given for ARR computation. Number one, average profit after tax by original investment into 100. Average profit after tax by average investment into 100. Tell me, what are the two formula for ARR? Simple formula. Start. Very good. Second one. Very good. Average investment into 100. Okay. Now question will come. What is this PAT means? Profit after tax is a cash flow, not a cash flow. Cash flow, not a cash flow. Because in that what is there? Exact wrong answers. Who said that answer? What? Read the numerator once. What is this? Read the numerator. It is a cash flow, not a cash flow. Yesterday, 1 hour discussion. What and what are not same? Cash flows are not same. Profit is different. Cash flow is different. FM consider. Income tax consider. Accountancy consider. Decision making consider. Cash flow, not the profit. Understood everyone? Okay. I told you one concept to you in one of the previous classes. I did not remember when exactly. Amazon company makes the profits or losses. Profits or losses are. That loss is because of depreciation. That loss is because of depreciation and amortizations. Amazon has around 2,000 crores to 2,300 crores. So depreciation expense is there. Amortization somewhere around another 1,000 or 1,200 crores of amortizations are there. Both are non-cash. Both are profits. The loss of Amazon is 1,204 crores last year. Profit or loss? Loss 1,204 crores loss. Amazon. But answer that 1,204 crores loss came because of deduction of a depreciation. Deduction of an amortization which really did not happen. Everyone answer. In reality, Amazon is a good company, a bad company, a very, very good company. But why losses are there? That is a loss, an accounting loss, not real loss. Are you listening? What we have to do? Amazon, what we have to do? Add back. What we need to add back? Depreciation amount. If you add back, it came to somewhere around 2,500 or 2,600 crores profit. It will turn. The 2,500 is called as what? Cash flow. 2,500 is called as what? That's the reason why financial statements are defined under section 2 clause of 41 of Companies Act. 2 clause 1 of Companies Act. Financial statements are defined as financial statement includes a statement of profit and loss account, balance sheet, cash flow statement. What is the third one? For Amazon, you should see cash flow statement, not P&L account. P&L account la loss is there. Cash flow statement la surplus is there. And what do you understand after reading both the statements? Company ke non-cash expenses are there. That's why loss is here. But in reality, there is a cash surplus. Are you listening, everyone? And moreover, Amazon works on what? Volumes. Leverages chapter, what we read? What is the first villain of the entire company is whom? Volume is a villain. In that they target. That's why whenever they feel that number of units sold is reducing, announce Great Indian Sale, Nonsense Sale, some sale. Are you understanding? Sale will be there, some prime days. At that time, how people will buy? Crores of rupee transaction will happen. Latest they said 3,000 crores business happened on one single day. Diwali time last year. 3,000 crores. You imagine what is their turnover? Yeah, one day turnover they reach the one day, not one day, some 3-4 days. Diwali they will put an offer on prime deals or something. Diwali. 3,000 crores they made Amazon. Like that Flipkart also will do. Correct or not? See, Amazon and Flipkart are the major market share takers in India. But there are so many small 1%, 2% market shares also. Correct? How much business is happening online commerce? In that online commerce, everyone will come, including me. Ours is on an e-commerce business. Anything that's sold on online, delivered on online, given on online, services online, everything is an e-commerce business. Diwali time, I also put an offer. One day we will get around 6-7 lakhs. It happens. Because so many CFL students will not buy in the month of October. They will wait. Vijay Dashmi will come, Deepavali will come. Let's wait. He will definitely give. They are also very genius. That's why one Diwali I did not give. Gone. So, my point is, listen, it is a substantial matter what you need to understand. Whenever profits are taken, profit contain depreciation, will not contain depreciation. And profit depreciation is adjusted or not adjusted? Loudly adjusted. And profit is a cash flow, not a cash flow. Cash flow, not a cash flow. But this model considers only profit. See, last 30 minutes back when we discussed depreciation, I told you how to do. Depreciation should be first deducted. Later you should. If I totally ignore, what will happen? Tax saving also will be ignored. Gone. Unnecessarily will get reduced cash flow. Proof also we have seen. Correct? Huh? Okay. Now, second situation. If in question in exam, they gave you profit. They gave you have to calculate cash flow. What you will do? Tell the answer. Yeah? They have given you profits. You have to calculate cash flow. What you have to do? Add what? Very good. Then what will happen? Profit plus depreciation gives you what? Loudly. Clarity, yeah, everyone? Everyone. Clarity, yeah? Pakka. Next, second question for you. They gave you cash flows. In this, you should take profit. And what you will do? They gave you cash flow and they gave depreciation. ARR computation came. Then what you will do? You should not add back. You should what? Data such that profits you should arrive and compute. Reversal we will do. Exam questions comes like that. Everyone understood the point clearly, yeah? Okay. Numerator what we need to take? Profit after tax, average profit after tax. I will ask a question, tell me. Project will be for 1 year, more than 1 year. Capital budgeting project ki first feature yesterday we discussed long term. Do you remember? That means when I purchase something, when I invest crores of rupee on something, at least 4 or 5 years expectation will be there or not? Please answer. We will 5 years life, project life. We will estimate cash flows for 1 year, all 5 years. Loudly. Super. When I estimate the cash flow for all 5 years, I will calculate the profits also for all the 5 years. 5 years average will come in numerator. Par. Okay, well, stay. Again, start. Hey, listen. What? Hey, listen. Hey, chick, listen. First column. Very good. How many years? Very good. Second column. No. Profit. Sorry. Okay. Tell like this. First column. Second column. Cash flow. Let us take. Plus the depreciation or minus depreciation. Then next column. How many years? Total profit for 5 years. Divided by 5. What will come? That should come in numerator. Next on the other side. Same again, but what will be there in the denominator? Original or average? What is the difference between original investment and average investment? A question here. Okay. See, I will ask one question just to try answering because we already discussed this. What is the formula for? See, when I complete the question, fraction of second answer should come. What is the formula for Return on investment. What is the formula for return on investment? What divided by everyone? Investment. What is return on investment formula? Everything divided by investment. Tell ya, what is the formula for return on investment? Everyone? Equity shareholders wanted a return called as what? Dividend will be paid out of, that means profit. Numerator profit is there. Divided by investment. That means this is return on investment formula. Hey, understood? Hey, project life. Hey, listen, yeah, please don't irritate always. Project life is for 1 year or 5 years in our example. Huh? That means your investment is for 1 year spread across 5 years. See, once I invest, I can use the project for numerator. What will come? I will get profit for 1 time or 5 times. Then denominator, you should not take only one investment. You should take all the 5 years average investment you should take. That's how the second formula came. But the second formula requires a lot of analysis. That's what we are going to do in this particular question. If a question comes in exam to make you uncomfortable, that comes on second time. A second time, there are no great exam questions. But ICA material, there are 2 important questions. We will solve that. Full clarity will come in. Everyone, shall we? Yeah. Please focus on the concept here. Jokes apart. Okay, you have fun in the class, but still, along with that, learn. Or else people will tell, Chai. You will tell him, he will tell him. All the 3 will tell both. All the 3. I said China. And you only. He will tell, hey, he is telling about you. Again, he will tell reciprocate back. Listen carefully. Hey, answer. What are the 2 formula for ARR computation? Number 1. Second. In this entire formula, into 100 was better said, which is irrelevant in the point. Remaining, you say, average profit after tax by origination into 100. What is most relevant in that formula is into 100 actually. Even if you don't do, no problem. Our concentration is on what? Into 100. What is the first formula? I want to know. Next. Exam he will go something into 100. Highlight something into 100. This question I shouted into 100. Something into 100. What is that something? Then he will write something into. Right now. What is the heading you kept? Just a heading you kept. The heading you kept, that's it, right? Write down the notes. Everything you did not write, directly will type. Average rate of return considers profits instead of cash flows. Average rate of return or accounting rate of return, anything you can write, interchangeable words. Average rate of return or accounting rate of return considers profits, not cash flows. Considers profits, not cash flows. Okay. Okay, well, everyone. Considers what? Considers what? But not what? Considers what? But not what? If they give cash flows in the question, what you will do? What we need to do? Profit plus depreciation cash flow. Cash flow minus depreciation will be profit. Continue writing. Point 2. If If cash flows are given in the question, if cash flows are given in the question, what is written cash flows are given in the question, then to arrive at profits, to arrive at profits, to arrive at profits, to arrive at profits, we need to dash depreciation. Don't read dash depreciation. Bah. I mean dash means you need to fill. We need to dash. Deduct depreciation. Okay, equation mari you write down below, you will remember. Profit plus depreciation equal to cash flow. Okay. What you have written? Profit plus depreciation equal to, below write down, cash flow equal to profit minus depreciation. What you have written? Cash flow equal to profit. First what you have written? Cash flow equal to profit plus depreciation. Then profit equal to cash flow minus depreciation. Reverse, exactly reverse to that. Next write down. Next write down. Okay. ARR formula. Branch it into two. ARR formula. Branch it into two. Okay. Hey, below one write written original investment, average investment equal to. Write down that also. Average investment equal to original investment minus salvage. Original investment minus salvage divided by 2. minus salvage value. Original investment minus salvage value divided by 2 plus again salvage plus working capital. I will tell you why. Let's write down. See here. Tell me, listen. What is the first version formula for ARR computation? Average profit after tax divided by original investment. Next. ARR second formula, tell me. Tax by average investment. Okay. So now point came. What is average investment? Original investment plus original investment minus value divided by 2. Next plus salvage value plus working capital. Let me first explain. What is this working capital? Why it is added to investment? Listen. See here. In our continuing example, we are having sugarcane, we are having a machine, we are having an output. Tell me, if I want output, this will be sold. Please, output will be sold. On that cost will be deducted, including depreciation. We will get a profit. Cash flows we will again add back depreciation or a different story. This is how we generally do. Come back to the story now. You can understand. What is this? Raw material sugarcane. What is this? Machine fixed asset. This is a fixed asset. This is a current asset. Okay. Both put together will generate what? Output. Also called as a finished goods which will be sold. Generates revenue, generate cash flow, generate profit. That's what we are going to understand. See here. You are analyzing sales and minus cost. This sales happened only because of asset. Means I have a sugarcane crushing machine, no sugarcane. What will I sell? Nothing I can sell. Correct? And here, how much important is the fixed asset? That much important raw material also. Raw material you will buy once in 5 years, every day. That's called as a working capital. That's called as what capital? Means you won't invest in sugarcane once, you will invest in that throughout the project. Listening, that particular amount also will be added because you are also investing in current assets along with fixed asset. All of them only is giving profit. So therefore, what they say, initial investment means don't just take the asset investment, also take the working capital investment. Working capital, another name is current assets. Working capital, another name is, I'll ask question, tell me, stock of raw material, fixed asset or current asset? Answer, plant and machinery. I require sugarcane, I require a machine, it should go and output should come. Clear? Which is important here? Sugarcane important or machine important or both important? Both. I should invest in sugarcane or machine or both? Both. That means both you should consider. That's a working capital also. Okay. Clear everyone? Yeah. Difference between working capital and main original investment, whatever we are seeing now, working capital will be spent not once, it will be spent every single day or at least in a cycle. Raw material, look at me please, cash will be there, converted into raw material. Converted into, how cash will be converted into raw material? Very good. If you purchase, tell me, what is there with me first? I purchased raw material, converted into. Raw material went into production process, going on, work in progress. Over, finished goods. Over, sold. Sales will give you debtors. Sales will give you what? Debtors will again pay you. Again cycle will start. Means every time you need to put money, one time. One time if you put, cycle will rotate like that. I will invest in sugar cane. Let us say, for example, 1 lakh rupee sugar cane I purchased. How much? 1 lakh sugar cane I purchased. 50,000 other expenses I kept. Labor, overheads, etc. Are you listening? See the situation. I have 1 lakh 50. 1 lakh sugar cane la invest. 50,000 work in progress, labor and other charges ka invested. Okay, va? See, cash became raw material. Raw material became work in progress. Work in progress became finished goods. Finished goods are sold to debtors at profit. Debtors gave me 2,50,000 rupees. Again, this 2,50,000 goes to cycle. Means every time we need to invest, cycle will take care. Cycle will automatically take care. That's called as a working capital cycle. On that only we are having a separate chapter called as working capital management. There we will see that. Listening up? Listen again. I have cash. I have cash converted into cash converted into raw material getting converted into work in progress converted into finished goods converts into sales will be converted into debtors are converted into again cycle will start. Means cash is coming to the cash position after a particular time period. Cash, I will purchase raw material in 5 days. Raw material will be converted to work in progress in 5 days. Work in progress will be converted to finished goods in another 5 days. 5 days over. Finished goods will be sold in another 5 days. Okay. 5-day credit. Debtors will pay me in another 5 days. 5 days over. And how many days? That's called as a working capital cycle period. Repeat. And it takes 25 days for what? Cash to become cash. Repeat what I said. It takes 25 days to convert cash into cash. Cash will be turning into various shapes. It takes 25 days to convert that. Clear? After 25 days, again cash will come. Again I will reinvest it. Means every time you need to put investment, one time. That's why working capital, one time they will give in the question, you have to write that working capital amount here. This will only rotate every time. Understood, everyone? Okay. So tell me, what is the formula? Original investment divided by 2. Divided by. Now listen carefully. I will show one diagram. Just see that. Discussion we will make once after that. Okay. X-axis what is there? Graph la x-axis what is there? Y-axis what is there? Now you will tell, I will write. Tell me. X-axis what is there? Y-axis what is there? Now listen, please listen carefully. Start. Today, 1, 2, 3, 4, 5. 5 years. Start and tell me the answer clearly. Please everyone participate. Tell me. Today, I invested in an asset which is worth this 5 lakh will have 0 value by the end of 5th year. That's why salvage value will be 0. Listening? SLM depreciation. Yeah. Tell me, first year how much depreciation? 5 lakh rupee, 5 years life. Each year depreciation. 1 lakh. Correct? So, can I draw a graph like this? Today, asset value is 5 lakh. 1 year after, it is 4 lakh. 1 year after, 3 lakh. Like this, it will move like this and reach here. Correct, everyone? Am I correct? The points on the graph randomly we kept, but we can understand like this: first year, second year, third year, fourth year, fifth year. Yes or no, everyone? Now my question is on that only. Tell me, we are investing how much today? Very good. We are having zero value when, but we will get cash flow in the zero era, in the fifth era, all the years are. Loudly? All the years. Okay. Now listen. What is the formula for ARR? Average profit after tax by average investment or original investment. Correct? Tell me. When I invested, profit will come today, na? After 5 years, all the 5 years. Means I will get a profit here, profit here, profit here, profit here, also here. Correct? Everyone? Okay. 1 lakh, 1 lakh, 1 lakh, 1 lakh. Sorry. Profit, let us take higher amount. 2 lakh, 2 lakh, 2 lakh, 2 lakh, and 2 lakh. Let us say example. It won't happen example. Some number will come, we will take a uniform number. 5 2 lakhs I am getting. How many 2 lakhs here? 5 2 lakhs I am getting. Now you please answer to the query now. I am getting profit for 1 year, all the 5 years. I am putting investment for all the 5 years, 1 year. Lovely. 1 year. I am not investing every year. I am investing only once. Now the question. This profit comes after 1 year. This will come after 2, after 3, after 4, and every year profit. 2 lakh, 2 lakh, 2 lakh, 2 lakh, 2 lakh profit came. Now starts the real discussion. Please listen. Formula derivation I am going to tell you. See, they say like this. 2 lakh into 5 you got. How much? Divided by how many years? How much? What is this 2 lakh? Average profit after tax. Average? How much? How much is the investment I made? 2 lakh divided by 5 lakh. 2 divided by 5. How much? 40%. 0.4, 40%. What is 40%? Yeah. Repeat everyone. What is 40%? Yeah. Again repeat. What is 40%? Yeah. Everyone understood to hear clearly? Yeah. However, they say this is wrong. This is wrong. Why it is wrong? Na? Why it is wrong? Na? They say like this. Please concentrate. Listen. Same graph, a different analysis. You will tell now. Tell me. X-axis la what should come? Y-axis la what should come? Tell me how many years? 1, 2, 3, 4 and 5. Correct? 1, 2, 3, 4 and 5. Like that. Tell me. Today, 0 year, how much I am making investment? Loudly. Now I will ask a question. Please answer. Okay. I will get profit 1 year, all the 5 years. Yeah. Everyone? How much profit I am getting? Profit I am getting. Correct? Okay. Now tell me. Concentrate. See here. How much profit you got in the first year? 2 lakhs. Huh? 2 lakhs. This profit came between 0 and 1 year, 1 and 2 years. Loudly. Super. 0 year, you got 0 to 1 year for your hard work. First year ending, how much profit you got? At that time, what asset you used? How much value asset you used to get the 2 lakh? Huh? Start again. You are not listening. Your mind is not here. Start again. Listen carefully. Mind upset. I will repeat. Please. Don't think otherwise. Start again. How much you invested today? For that, you got return for 1 year, all the 5 years. First year, how much you got? 2 lakh rupee profit you got in the first year on an investment of how much? So, can I write for 5 lakh you got 2 lakh? 5 lakh you got 2 lakh. Very good. Next, second case you come. Please come to the second year profit. Second year profit you got with an asset of how much? first year, how much is the asset value? Answer. You used 5 lakh worth asset and you made 2 lakh profit. First year, there is a 1 lakh depreciation. There is a, what he said is the right answer. 1 lakh is a depreciation. Second year beginning ki, you are using a 4 lakh worth asset, 5 lakh worth asset. On that you got 2 lakh profit. You understand now, everyone? Next year, okay, you used a 4 lakh asset. Another 1 lakh gone. Next year how much? So for the next year, you are using a 3 lakh asset only to get the 2 lakh, correct? Means, tell me, the asset value will be same every year, will be changing. First year, how much it will be? 5. Second year, third year, fourth year, fifth year beginning ki. These are all beginning. 0 year ki 5 lakh. 0 year 5 lakh. You started with 5. First year ending, how much it became? 4. Second year, 3. Third year, 2. Fourth year, fifth year ki 0 value asset. My question. You will answer, I will write in between. Between this and this, what is the value of asset? Now you will answer. You should answer stage 1, 2, 3, 4 and 5. Tell me. Tell me the answer. Stage 1, what value asset you use? Stage 2, stage 3, stage 4, stage 1, stage 5, 1 lakh. So totally 0 year you used 5 lakh, you made a profit of 2 lakh, correct? Now you please tell me, what is average PAT? What is average PAT? Profit after tax. What is average profit after tax? How you got? 2 lakh plus 2 lakh plus 2 lakh plus 2 lakh plus 2 lakh, 10 lakh divided by 5. Average profit after tax is simple. I am talking to everyone. That is done. Denominator what is there? Average, all this you leave. First, what should be there? Investment. How much I invested? Normal original investment formula, directly you should write 5 lakh. 2 lakh by 5 lakh, answer will come. But we are now doing original average. They say like this. Listen carefully. 5 lakh you started. You have used 5 lakh asset, 0 value asset. Today, what is the value? 50 ending, what is the value? 0. Which is true? 5 lakh true, 0 true, both are true. Then what I should take? In reality, it is a 5 lakh asset at the beginning. In reality, it is 0 value asset at the end of the project. And when I say it is a 5 lakh is correct, beginning if you see, 0 is correct, ending if you see, I should take beginning and ending average. That's how original investment plus closing investment divided by 2 came. Don't take, are you listening? Don't take opening. Don't take closing. Take average. Sir, you did a mistake, sir. Closing you did not give in the formula. Use your mind. Closing it will become 0. Yes, sir. Closing it will become what? Yeah. 0. Again I am asking another question. What is 5 lakh? Opening, closing, only. What is that 5 lakh? Investment. Inflow or outflow? Loudly. Outflow. What is 4 lakh? Inflow or outflow? I am asking. 3 lakh. Every year we are putting already kept. Comparison. Tell me. First. Inflow, outflow. 4, 3, 2, 1, 0. All these are values of outflows. Last year I did not put anything because asset over. Fifth year ending ki what is the asset value? First year beginning and 0 year ki what is the value? 5 lakh true, 0 true, both are true. Then how can I take both? That's why they said don't take extreme 5. Don't take even extreme 0. Take what? No, sir. I will take 3 lakh. How much? 3 lakh. When you purchase, at what price you purchase? 3 lakh you purchased. Therefore, they said don't take extreme 5. Don't take even extreme 0. What? 0 at the end of last year is a what? What is that 0? No. Are value of asset and asset purchased, asset sold, purchase. Outflow na inflow na? Loudly. Outflow. But the outflow is 0 na? Some value 0. Therefore, opening investment or original investment plus the closing investment, even if you write, the value will be anyway what? 0. Better is him only. So listen. Start. Opening plus closing divided by 2. Opening, what is the value? Closing, what will be the value? Yeah. So anyway, in any capital budgeting project, closing value will be how much? 0 is what? Inflow or outflow? Outflow. 5 lakh is what? 5 lakh is what? Closing sometimes that may also give a salvage value, correct? So minus salvage value because it's an inflow divided by 2 they have taken. That's how that formula is derived. That's why what is the original investment formula? Start. What is the average investment? What is the average investment formula? Original investment. Actually, closing is there, but closing value is always what? Yeah. So original plus closing minus salvage divided by 2. But what is there? Closing will be always what value? 0. Still what I got? Salvage. Salvage is inflow or outflow? Inflow. Oh, doubt. Salvage, inflow, outflow, doubt you got. Salvage is a inflow or outflow? Inflow. Investment is a? Outflow. Investment is positive number in this case means salvage should become which value? Negative. Because it's a reversal value to that. So what they have taken as a formula numerator, start. Original investment plus closing investment minus salvage whole divided by 2. That will give you which value? Average. Give which value? Average. Now you please tell me, in that we considered, we do not consider the salvage part. Correct? What we did not consider? See, asset value is how much? You purchase 5 lakh worth asset, correct? But last year you got 50,000 salvage. What you got as a salvage? 50. Okay. Now divided by 2 means, or let us take 1 lakh directly. 4 lakh divided by 2 means how much it will become, everyone? 2 lakh. What is 2 lakh? In original investment, average investment. Loudly. However, in this, what we do not consider. And what we reduce, that's what I mean. What we reduced. We purchased asset worth how much? But in this average, what is not considered? Average computation, salvage is removed because it should not come. But in reality, the 1 lakh also we invested or not. So they added again salvage value. Average computation, salvage won't come. But overall investment, salvage has to be taken. So tell the formula now. What is the formula for average investment? Start. Original investment plus closing investment minus salvage value. This is actual average. Answer. But in this example, you see, what is our investment? What is the salvage? And what is the net investment? Doubt. 5 lakh minus 4 lakh, you got doubt. What is your original investment? What is your original investment? What is the salvage? What is the net investment? Net investment is 4 lakh, but really original investment is how much? That means salvage we do not consider an average, but in reality we invested also that 5 lakh, also that 1 lakh. Therefore, they will again add the salvage value along with the working capital also will get added. So tell me what is the formula for average investment? Start. This part will give you direct average. Next, plus salvage value plus working capital will be invested once every year. Once every year. Every year means already it is in average. Therefore, we need not again divided by anything. Salvage value already considered in average, not considered in investment. They added. This is how the formula has come. This is the formula for average investment. Finally, you should give me one answer. What is the formula for ARR? Start. No, you should give as origin first format and second format. Both the formula you give. Next. Very important. Note it, very important. Into 100. Or else answer will go wrong. Next. Very important. This is. If you do not write this, the answer will be wrong. Sir, anyway, everyone understood the concept up to here clearly? Yeah. This is all about the concept of average rate of return. What is another name for average rate of return? Accounting rate of return. Part of the class, we will see the question and answers in this.